And without further ado, I would like to call up our panel, our second crypto battle. It's Bitcoin versus gold. Also, please don't hear what I am not saying there. I fully believe in crypto assets and cryptocurrencies. I just think it's important to understand what's the incentive for people to invest, which brings us to gold. Could I call up the panelists? Let's give them a warm round of applause, folks.
Cool, thanks.
Hi there, everyone. My name is Martin Harris. I'm a trader and market analyst. Used to work for a hedge fund in the alternative data space. And I'm actually going to be here to try and prop up gold a bit in the Bitcoin crowd, so it's going to be quite exciting. Thank you very much.
Hi there, I'm Piotr Tylczynski, Senior Vice President Global Development for MineBest. We are a technologically advanced infrastructure company that basically builds, operates, and manages mining farms, cryptocurrency mining farms. I'm not sure about mine stance yet. Let's see how the others, where this discussion is going to go. I'm somewhere in between, I guess. Let's see where we're heading with this.
Hi, I'm Richard from Altcoin Trader, founder of Altcoin Trader. I'm here to defend, obviously, Bitcoin. But before we get into that, we have recently listed gold on our exchange. So gold is certainly not something that we're against. In fact, I do own gold. I'd like to own more gold. But for the purpose of this debate, I will be on the side of Bitcoin.
Hi everyone, my name is Graham Tennant. I work for a company called Avon Core, and we develop software for asset management businesses that are looking to introduce digital assets into their offerings. And I also work quite closely with James at SA Crypto. We do a market analysis on YouTube. Yeah, my stance is also fairly neutral. I do own gold, I do own Bitcoin. The question is, do I want to drop my gold for Bitcoin? And the answer is absolutely not at this stage. But don't throw your missiles at me, you can save those for Martin. Yeah, but looking forward to a good chat.
All right, so we're not going to stand here and pretend like we did not hear him saying that they just listed gold on a crypto exchange. I think he deserves a round of applause right now. That's very, very unbiased. So this is going to be an interesting talk. So gold has been a store of value, reliable. A lot of people still believe in it. Pretty much the system still values gold as kind of the baseline of wealth preservation. And we are in a digital economy right now. We're getting more digital. Is it time right now to drop your gold for Bitcoin because it is the future? Or Bitcoin is just one of those phases where it's going to come and go? So that's what we're going to try to explore here. So let's start with Richie. You have an exchange and you just listed gold on a crypto exchange as well. You have 2 minutes to explain your position.
Okay, well, I feel privileged to start. And I've got a couple of things that I'd like to address, very practical aspects. And I don't want to go with the old cliche when you know that I'm about to bounce out of the gate saying how impractical gold is. But it is relevant. Gold is impractical. You cannot cut off a piece of gold to make a payment. In addition to that, let's take a real life example. If you go to a strip club and you want to pay with gold, it's uncool to bruise women. So we can't use gold for that, as well as many, many other real-world applications. Obviously, in the past, initially when the currencies came out, they were backed by gold. So even at that point, we were using gold represented by paper in the way of notes, in the way of fiat currency. So one of the things that Bitcoin is trying to get away from is a middleman. Now, gold is inherently dependent on a middleman to hold the actual asset while we trade with the representation of the asset. And I think that is pivotal to why gold cannot go forward and cannot actually sustain itself in a free-thinking society. Because you always have to have three parties unless you plan to physically move the gold and to actually use it. Whereas Bitcoin, we can successfully eradicate the middleman. There's no reason to have representations of Bitcoin.
Your time is up. Your time is up. So we're going to take it to Piotr Tylczynski. You want to set your position on gold, Bitcoin. Should we drop gold right now, or we should throw away the Bitcoin and go to gold?
Okay, it's a tough question. You know, there has been a lot of debate on this for many years. Obviously, you know, gold has some advantages. You know, it's not as volatile as Bitcoin is right now. You know, it has intrinsic value. It's being used in industries and jewelry and central banks. That's all as opposed to Bitcoin, basically. But I think I would like to play a bit the devil's advocate here in this panel by saying that right now we're looking at a potential crisis, financial crisis, heading our way. Everybody knows about this. And fiat is on the verge of elimination, potentially even, or at least playing a more minor role in the future, maybe. And gold and Bitcoin could be two alternatives. Well, gold is not very practical, as you said correctly. Bitcoin is a payment network and could be the perfect middle way, the golden middle road, let's say. However, my position is more the following. I don't really feel that we should continue the Bitcoin versus gold discussion. I feel more that we actually should see Bitcoin together with gold as opposed to the fiat standard. They can complement each other perfectly, and there is a lot of opportunities here to have synergy between Bitcoin as a payment network and gold as a trusted source and store of value throughout human history. Also, I feel it's not fair to compare Bitcoin with gold. Gold has been around for thousands of years. Bitcoin is just here for 10 years. It needs a bit more time to mature. But again, my position is, let's see it as a complementary thing and not necessarily as competition. Complementary against fiat, perhaps. That's my stance.
Great, yeah, you can just pass it on and hear what he has to say as well.
Okay, so I'm agnostic when it comes to trading gold or Bitcoin. All right, you've got opportunities in both. But now, if we think about like holding it as an investment, gold has multiple uses. If it wasn't so expensive, we would build almost anything out of gold. It is a fantastic product. To maintain the Bitcoin blockchain costs energy. There's a thermodynamic cost of keeping the blockchain active. Gold, once mined, is always mined. You do not have to pay to keep the gold network supported. And so my view, again, 1,000 years, if you think of problems with monetary policy, the solution, gold. You're worried about corporate debt, gold. You're worried about sovereign debt and South African credit yield, gold. You're worried about a global recession, gold. It has been tried and tested for many, many years, and we know how gold reacts in the market. So if you're looking for an investment that is a hedge against or a defensive currency versus something like Bitcoin, where Bitcoin you see, on a macro perspective, troubles with China to do with trade wars, boom, Bitcoin rides because guys are looking to get their money out of China into another asset, into other currencies. And so, yeah, Bitcoin is fantastic. Great trading opportunities. But gold is the store of value.
All right, so we should we should bring it here now. I think you have the last say.
All right, cool. So I think we're more leaning to the golden side here than Bitcoin. So you're going to have a tough task on your hands there, Richard. I'm also going to give Bitcoin a little bit of a hard time. So, like I said, I work for a software development company, but I'm most famous in my company for the fact that I'm the only one in the company that can't code. I'm from more of a finance and an economic background, and so I have the task or the enjoyment of throwing stones at the software that is developed. And the great thing about it is that once I throw the stones at it and say we need this or this needs to change, I don't have to be the one that does the hard work and actually go and do the work. And I plan to do the same with Bitcoin. So hopefully I can throw some accurate stones. Developers are really stubborn people, so sometimes you've got to throw a few rocks, a few boulders, to get them to do what they need to do. But for me, I think if you look at Bitcoin, there's three primary use cases I want to focus on where I think Bitcoin can potentially offer solutions, but is not living up to its full potential. So firstly, as a currency, it's too volatile. I can't, with confidence, buy Bitcoin today and make a purchase tomorrow and not be worried about the price falling through the floor. So right now, dollars, euros, rands, they're all better alternatives as a currency today than Bitcoin. Number two, as a payment system, I cannot buy beer at the bar, I can't buy a loaf of bread with Bitcoin, and that's a problem. I mean, I couldn't even pay to come to this conference with Bitcoin. So I really hope in the years to come that that's going to change, but I really think we need to up our game. And finally, as a store of value, and that's where it aligns or competes directly with gold. And right now, gold's been around for thousands of years. Bitcoins have been around for 10. I'll finish off. So gold is definitely the store of value. So unless it can compete and be the best in a specific field, my gold is staying safely under my bed for now.
All right, so for you guys, you can also participate in the discussion by tweeting about this conversation. You can put a comment or questions. Just make sure you use the hashtag CryptoFest2019 on Twitter. Now, just to get a little perspective here, how many of you would rather get $10,000 worth of gold or $10,000 worth of Bitcoin? So say, if you would rather own Bitcoin, raise your hands. We've got to see that. All right. How many? No, you can put them down. Thank you. How many of you would rather own gold? Okay. Okay, a lot of people want both, but it seems like the percentage will vary by a large margin. Anyway, so from an investment point of view, as an investor, how would you set up your portfolio right now? If you're thinking about, say, whether at a personal level or in an institutional level, how would you allocate your portfolio, say, what is the investment cases for both, Bitcoin or gold? I would like to know the reasons of why you would allocate it in such a way.
Okay, my answer is pretty short. It basically follows up on what I said before. Gold, Bitcoin is a correlated asset, right? As the previous speaker said, it's very much related to mass psychology, let's say, FOMO, fear, and so forth. And it follows the general trends, let's say, in other economic trading mechanisms. However, gold is a non-correlated asset. It usually is inverted. So if the stocks go down, gold usually goes up. So the best thing to do, and it just, based on my previous sort of thing really, is just have both, really. It's always good to diverse when you invest. Obviously, you need a diverse portfolio. And right now, I feel Bitcoin can really show itself during the next following financial crisis, whenever that hits, can really show its value. But as it is usually and has been a correlated asset, we're not 100% sure how it will perform under a crisis. So it's great to have gold as a backup, let's say. But having said that, it's not necessarily the fact that Bitcoin will do bad during a financial crisis. I think it's the first time we're hitting a financial crisis with Bitcoin being so active and the public being so aware. So actually we could see an inverted trend in terms of its correlation to assets with the next crisis following. So again, I would diversify, I would put both in my portfolio, and gold will probably do well in a crisis. And who knows, Bitcoin actually for the first time might do pretty well as well.
But how would you split it? How would you split the portfolio? Is it 50-50, 60-40?
It's a tough question. I wouldn't do it 50-50 because there would be other things that I invest in as well.
No, if you had to choose between the two.
If it would be 100% that, I would probably do it 50-50, I think. Just straight through the middle. Keep it simple, really. That would be my point. And also one thing that I want to say, which is, I think, interesting to note, is that, yeah, it's true. Bitcoin might not be very useful at this point in time in terms of paying for physical services. But look at what is happening in countries that are politically unstable, where we face hyperinflation. And this could happen during the next financial crisis. In these countries, the search for Bitcoin and the trading of Bitcoin is skyrocketing. And I think this could happen on a global scale as well in the near future. So my case is for both. I still keep my case here.
Interesting. You still did not give me the numbers, but that's okay.
No, I said 50-50.
Okay.
Yeah, I did. Did
okay.
I? Yeah,
Martin, you're a trader, so I would like to know your view on that. How would you split your portfolio?
Okay, so splitting the portfolio, you've now entering current cycle, and let's say things are very bearish, so everything remains equal at the moment. I would look at short-term trades on Bitcoin all the profits I make on my Bitcoin, I'll put it into gold.
So I'd definitely go 50-50, precious metals and Bitcoin. But I'm going to cheat a little bit, and I'm going to say that I want most of my precious metal holdings to go into silver. I think it's very undervalued, even according to gold. So that would be my preference.
Okay. Rich.
This question needs a bit of qualification. So if you were investing into cryptocurrencies in a responsible way, in other words, not dumping a lump sum onto a coin at the price that it is on any particular day, if you were rand cost averaging in other words, buying a little bit every month so that you could take full advantage of the growth of Bitcoin. I think anyone that just has looked at the figures over the past 3 years, Bitcoin is the best performing asset bar none. Nothing comes close to it. So I would really go with a 90-10 split, 90%. As long as it is responsibly invested into Bitcoin, I think your returns would speak for themselves, and it would outpace any type of gold investment you can have. The only reason that I'm putting 10% into gold is because I don't want to be totally irresponsible and I want to have some money to buy bread in the extremely unlikely event that something overtakes Bitcoin or the cryptocurrency, there's a flaw that comes out or something happens. But I don't think that if you are of sound mind and you know how to use a calculator and do basic maths, you can even consider that gold is a better investment than Bitcoin if you look at the numbers and you look at historically.
All right, so there's a split here. Peter says 50-50. Richie says 90-10, and he says he would cheat it a little bit and put some silver in there. And he says he can push long trades on Bitcoin, but very short term, and put his profits into gold. Now, how many of you would give your money would invest with Peter at a 50-50 gold and 50 Bitcoin? And how many of you would invest with Richie 90% Bitcoin, 10% gold? Okay, this is a very biased crowd, I think. Or Bitcoin. All right. Another question is, so is Bitcoin a safe haven and will outperform gold in financial crisis? That is the question. Do you think in financial crisis, say maybe it's going to happen this year? A lot of people are speculating in a year or two, which I personally think that financial crises are black swans. They happen when nobody is expecting them. But do you think Bitcoin will become the safe haven, or gold is still the safe haven?
Cool. So, yeah, I think a very interesting question. I think if you look at the price action of Bitcoin over the last couple months, given some of the turbulence that we've had in traditional financial markets, it's been great to see that Bitcoin is starting to show some signs of being a safe haven. So when we see a sell-off in traditional markets like equities and bonds, we often then see Bitcoin moving the other way, which I think is showing really good signs for the future. If I were to choose between the two of them, gold has to be your safer bet. Gold has been around for thousands of years. It's shown a track record to be a safe haven asset. It's the current king sitting on the throne. But it's all about risk and reward, because if Bitcoin is seen as a safe haven asset, when the financial system collapses, and you do have a run to the exit, and Bitcoin is one of those exits, it's going to be like elephants jumping into a jacuzzi. There's going to be no space. And that's going to send the price one way. So it's all about risk and reward. That's why I'll split it down the middle, 50-50 in my portfolio.
Right. Let's take it to Richard.
I think we need to have a clear understanding that Bitcoin and the whole industry is still in its infancy. So we need to be very careful trying to predict how it will maintain itself and how it will actually act in a crisis. So I don't want to be that guy that says go into Bitcoin as a safe haven. It hasn't been tested in this area. All the signs are there, and it does show that Bitcoin would hold out tremendously as a safe haven, as a wealth preserver. But as I say, it hasn't been tested, so we need to walk through a couple of cycles. I would be cautious not to take a very even spread on Bitcoin and gold. I believe that Bitcoin is going to be a safe haven, but like any new technology, anything that does come to the forefront, it needs to be tested, and we need to move forward in a responsible way. If you put all your money in Bitcoin as a safe haven, technology changes very quickly. And if it does change, you could be caught with your pants down. So I would say it is certainly a safe haven, but it is a maturing one, it's an evolving one, and we need to watch that space before we make quick, harsh movements.
Right, that's fair enough. Let's take it on to the next one.
Yeah, so I think, again, as I said before, the situation, I completely agree with you, actually. It's actually the first time Bitcoin will be around during a financial crisis. So it is very hard to predict how it will behave. And I would completely agree that it is quite risky to put all your money in Bitcoin and treat it as a complete, store of value at this point in time. On the other hand, one of the main problems of Bitcoin is volatility. And I feel that the more parties are going to be involved in Bitcoin, the less volatile it will become. Because the market cap will grow, there is more players, there is no room anymore for single whales to act, let's say. And I do think that I see that a lot of governments are becoming more interested, a lot of traditional investors are becoming more interested. And the more traditional capital flows to Bitcoin, the more stable it becomes. Also, there's a halving coming up, which I think makes a lot of sense if you look at historical data. Before the halving and afterwards, Bitcoin has always gone up drastically. And the halving is about to happen next year, somewhere in May, and this could very well coincide with the start of the financial crisis. So there is a lot of things to be said for it, I think, for Bitcoin being an interesting store of value or a risk aversion asset, let's say. However, again, I agree with you, it hasn't been tested yet. That's why I said from the beginning, let's do it 50-50.
2008, I was in high school. I had no money to worry about or to manage a portfolio, nothing like that. Right now it's different. I would like to know, Martin, what were you doing at the time?
Without going into too much detail, what was key during the previous global financial crisis was what they call time in the market. Is that people who withdrew their funds and waited for things to get better ended up getting nowhere. If you rode the global financial crisis, often you've made back everything you lost plus more. And I think you can look at it the same way with any cryptos, gold, you name it. And speaking just about averaging your costs in, rather if you are looking at investing, be exposed to the market than just completely withdraw and try and time the tops and bottoms from a long-term perspective. So that's really what I can add to that. You do want to focus on a bit of portfolio diversification and move towards less risky assets during turbulent times. But then, then there's the Warren Buffett kind of way that when there's blood in the streets is when you want to buy. So there's multiple things around it. I think one of the things to take cognizance of is that governments aren't going to lose their grip on fiat currencies and just let the cryptos come in. A lot of governments across the world are involved in their own cryptos. They want access to the digital coin so they can tax people on it. So there's difficult things. Going 100% into the established cryptos is a difficult sort of situation when there's the current status quo of governments controlling money, controlling taxes, things like that. It is also an advantage of Bitcoin, but we'll leave it at that.
But isn't Bitcoin easier to actually control in those kind of spaces, like during those times, because gold can be easily confiscated?
Well, look, governments already have been closing down on cryptocurrencies with anti-money laundering laws globally, and you see how difficult it is for people to get money in and out of some of the exchanges. If governments were to clamp down on that, and now in a recession, you're looking to use Bitcoin as a store of value, put a lot of money into it. Now you have to find an exchange where you can dump a lot of Bitcoin all at once, and you're going to hope the exchange stays liquid, stays up, and you can get your money out. Becomes difficult.
Okay, and gold, how would you liquidate that then?
Gold doesn't get manipulated the same way that crypto. The market is so massive in gold. I can go and sell $10 million of gold like that. And
how would you carry $10 million worth of gold?
You sell $10 million worth of gold through any trading or investment bank.
Okay.
If you go sell $10 million worth of Bitcoin on the local blue exchange, you'll crash the whole thing. So that's just something to say about gold.
But the value of gold is underpinned by its uses in jewelry and industry. what underpins the value of Bitcoin? This is the question that you get a lot from a lot of new people coming into crypto or gold backs, that, you know, on its own, gold has some value. I personally don't agree with that because I have no interest in ever owning jewelry at all, right? But what, for you Bitcoin guys, what is your defense to that?
Okay, well, obviously gold has intrinsic value. We know that for thousands of years. You can always buy a good suit with gold. Everybody knows that. But I do think that Bitcoin has value as well underneath. Bitcoin comes into the world via mining. And we are looking at a huge industry that has infrastructure, assets, which is worth roughly about $3 to $5 billion right now, and consumes around 4 gigawatts of power at this point in time. It's not intrinsic value of Bitcoin, but it is peripheral value, I think. Because there is a lot of actors involved with Bitcoin, not just the mining industry, but all the crypto industry surrounding this. It's a huge business by now, and I think that is, and the drive of a lot of people in the Bitcoin industry to push it forward, propel it, and be independent of governments and central authorities, gives it a lot of power actually, and a lot of value as well. And it's not the intrinsic value that we have known for thousands of years, but again, guys, it's only been around for 10 years. You have to see it in perspective. For example, we introduced mobile phones 30 years ago. Then we introduced the smartphones. At the beginning, most people were like, you know, I was also one of them. I was like, I just need to text and call somebody, right? Right now, I would not be able to live without the smartphone almost. But it takes time. It just takes time. You have early adopters, which is all the people here in this audience. And, you know, gold has been around a few thousand years. Give Bitcoin a bit of time, and altcoins. It's not just Bitcoin, by the way, because there is a lot to be said for other altcoins as well. It will show its value, and it's backed by an increasingly large industry.
So, in short, you basically saying that Bitcoin has no intrinsic value.
Well, Bitcoin as such, it's not based on it's not tangible, right? It's not, you cannot like give it literally to somebody. It's very much about perception, but also gold's value is somehow about perception. Yeah? Everything which has any value is about the perception of two people exchanging that good or that service or whatever between themselves. So you could even say that almost gold has no intrinsic value in a way. But yeah, it is used in industry, so that's definitely an advantage because it will probably create some kind of a need for gold in the future. Again, I do think that Bitcoin does have peripheral value, which is not less important than the intrinsic value of gold.
All right, Graham, what do you say to that? Bitcoin has no intrinsic value?
Yeah, I really like the argument that you made. Peripheral value, I think, is a really good point to bring up. But yeah, I think when you drill down to it, Bitcoin has flaws in that it doesn't have a tangible use beyond the code. So if you are in a situation where you're looking at gold, I mean, there's ladies in the audience, and if you have wives, you'll know that they'll enjoy their jewelry. And I don't think jewelry is going out of fashion, so Gray, even if you don't want to wear a necklace, you'll be able to offload that gold to someone that wants to use it for industrial use or for jewelry. So Bitcoin doesn't have that that underpin that gold does. And I think that's why, again, if you're looking for security or a safe haven, I think gold is still the one to beat.
Right, so if you're looking for intrinsic value, gold. If you're looking for peripheral value, Bitcoin. Is that what you're saying?
Yep, I think that's a good way to sum it up.
Okay, Richie, what do you say?
I think intrinsic value is a fiction that we've all created and that gold bugs have used to boost their argument. If we talk about the intrinsic value of the rand or the dollar, I guess we could burn it in the winter to provide warmth and to keep ourselves warm. Other than that, there's no intrinsic value at all. It is a fiction that we all participate in. So having said that, even with gold and the intrinsic value that it can be used for circuitry, it can be used for jewelry, fiber optics and light is probably more useful for generating and moving current or polarity. The gold is very much not in fashion for ladies' jewelry. They would rather have platinum or silver gold or any other section of it. So intrinsic value, I don't think holds much water when it comes to trade. I mean, humans and our species has used commerce and has traded stocks, bonds, shares, so many things that don't have intrinsic value. Even when we've traded gold, we've very seldom actually got hold of the physical gold. So I think that it's a very much of a moot point. The intrinsic value of Bitcoin, in the very definition of the word intrinsic, it would be a difficult argument to win, to say that it is worth something. But all software, it's difficult to define the intrinsic value. So Bitcoin has a lot of uses like a lot of software, and it will be used for trading. And by a stretch of the imagination and by maybe broadening the meaning of intrinsic value, Bitcoin would outstrip gold with functionality in every angle or avenue.
Fantastic. So lastly, we're just going to take questions from the audience. If anyone has a question out there, if there's any, before we close, because we're running out of time already.
Hi everyone, my name is Sean. Thanks guys for a nice discussion. Something very not related to what we just discussed now, but I would just like to know from maybe each and every one of you, what do you think will be the value of Bitcoin by the end of the year or after it has halved?
So I'd like to answer the question in this way. I fully believe that Bitcoin is going to R1 million per coin, and I'm very conservative when I say that. But before I hand this mic over, I am going to tell you exactly when that is going to happen. So that is a bold statement, and I bet you all thinking and looking at me as if I'm mad. So get ready for this. Bitcoin will be going to R1 million in the future.
Look, if you were to push me, I'd say next bull run, we're going to 50,000 at least. When that's going to be, I would say within the next 3 years. That's as good as a prediction as I can make.
Well, I'm not going to join in and say 1 million because I'm not John McAfee and I value certain parts of my body, so I would prefer to keep it. But you know, I do agree with Graham. I think it's really hard, and a lot of people are asking this. And you know, if I would know, I would disappear from this planet and just buy a separate island somewhere and live there happily ever after, probably, because I would know how far it goes up and how much to invest. But guys, I think I agree. It will definitely hit an all-time high. That's for sure. How high it will be, I don't know. You can look at the historical data and check how much percentage raise we experienced during the previous halvings, because usually before the halvings it goes up and it goes even more up after the halving. You can probably make a sort of an analogy based on that for the next halving. I don't know the exact percentages, so I cannot tell you anything, but I think 50,000 is realistic. I think that's definitely possible, yes. It's definitely going to go to an all-time high.
If we continue with trade wars and China is still put in a difficult situation, we'll definitely see a bull run on Bitcoin. It's going to encounter a lot of resistance up past $17,000 though, as everyone who's been hodling at those levels now looks to get their money out that they've been sitting with for 2 years in this coin. And so that's really what I see. Is I would see a continuation of a bull run, and 17,000, if it breaks 19,300, the peak, then you might set liftoff. But I think there's going to be a lot of resistance between 17,000 and 19,000 if it were to get there.
You know, it's one thing to look at the value of things in terms of dollars, and we're just so used to doing that. Bitcoin is X amount of dollars, or gold is X amount of dollars. But you know, if the future plays out, like I think many of us think it will, where you have destruction of the value of the dollar, we shouldn't actually be valuing these things in dollars. So it could be worth $1 million in the future, but if your rand, if your rands are worth Zimbabwean dollars in the future, it's not going to mean very much. So I look forward to the day when we can value Bitcoin in, you know, the amount of loaves of bread we can buy, or the amount of beer we can buy at the bar, and not in US dollars. And I think that's what the future looks like.
Yeah, that is the end. Thank you guys for being here, and yeah, thanks to the panelists as well. You can follow all of them on Twitter. You just have to look them up. Type their name in on Google, Twitter. You'll be able to find any one of them. Thanks, guys, and thanks to CryptoFest.
Thank you. Thank you, Gray.